Hello, everybody, and welcome to the Ides of March, March 15th, and our special class for today. Again, what we're going to do is just review a very simple quiz with one question from each chapter in our book, and try to go over some explanations of why those answers are what they are. So let's get started. Easy lesson today. Make sure our screen is functioning. Okay, in New Jersey, we transfer personal property by what method? And so the trick here is we transfer personal property, and we transfer personal property by bill of sale. We transfer real property by deed. Contracts are the methodology which we promise to transfer real property, and a habendum clause is the clause that's found in a deed that says how much of an estate you have. The next question is, how does a person become a realtor? Well, the way you become a realtor, which is a trade association, is you join the realtors, you pay your dues and promise to abide by the realtor code of ethics. So the way you become a realtor is to join the realtors. The realtors are a trade association. If you are a member of the realtors, you are then allowed to use the realtor identifying trademark. And remember, if there's a commission dispute between agents from competing offices, that commission dispute cannot be brought to the real estate commission. That commission dispute can be handled through mediation and then arbitration by the realtors. Now, if you haven't noticed yet, we're doing one question from each chapter, and this is a question on chapter 3. But chapter 3 is the chapter that has the most questions on the test. So we want to, on our studies, we want to pay particular attention to chapter 3. But this little Quizlet here is for just one question from each chapter. So how long does a salesperson candidate have to get licensed after finishing the 75-hour course? And you have 1 year from the day we sign you out of your 75-hour course to get licensed, to get fingerprinted, and to hang your license. If you don't do it all within that time, then you lose your eligibility for the test, and you'll have to take the class again. Now, a question from chapter 4. All of the following are types of freehold estates except. So an estate for years is a type of a lease. Freehold estates are fee simple, life estate, or qualified fee estate. And fee simple estates are examples of real property ownership. An estate for years is a type of a lease or a personal property right, also known as a leasehold estate. Chapter 5. Which type of ownership cannot be inherited? Well, we're talking about the 4 major types of ownership. We have severalty, tenants in common, joint tenants with rights of survivorship, and tenancy by the entirety. So which type of ownership cannot be inherited? It's a joint tenancy with rights of survivorship. Because in a joint tenancy with rights of survivorship, when one of the owners dies, his share goes to his other surviving partners or owners in that particular piece of real estate. It does not transfer as per his instructions in his will. From chapter 6, a wife's right to her deceased husband's estate is called the dower right. The courtesy right is the husband's right. The wife's right is the dower right. Chapter 7 question. A person has a neighbor who wishes to have the permanent right to drive his car across the neighbor's land to reach a highway. And the key here is the permanent right. So he would then ask for an easement appurtenant. Remember, a license is only temporary revocable permission to use somebody's property, so it's not permanent. A lease is for a period of time, and a prescription is a manner in which you create an easement. So he would ask for an easement appurtenant. Question from Chapter 8. A report showing all of the owners of a property in chronological order is a chain of title. And we get a chain of title when we're doing a title search in order to prepare a title insurance policy. The abstract of title is the written report that states everything that the title searchers found that pertains to that specific property. A question from Chapter 9. This is the chapter on contracts. An option contract must have which of the following elements? And remember, an option contract is a unilateral contract where only the seller can be forced to perform and the buyer performs at their option. So an option contract must have an agreed to sales price, an agreed to option period, and option consideration. That is in the definition of an option contract. Chapter 10, the chapter on agency. If you are going to be a disclosed dual agent, which means both the buyer and the seller are your clients, you must have an informed consent to dual agency signed by both parties. You must have an informed consent to dual agency signed by both parties. Chapter 11, this is the chapter on listings. All of the following are types of listings except, well, a multiple listing is not a type of a listing. A multiple listing is merely a bulletin board where brokers cooperate by sharing the information about their listings. An open listing is a listing where it's given to many brokers at once, and whoever sells the property gets all the commission. An exclusive right to sell listing is a listing that no matter who finds the buyer, no matter who is the procuring cause of the buy side of the transaction, the listing broker still gets paid. And in an exclusive agency listing, the seller reserves the right to sell it themselves and not pay a commission. So again, if the seller is the procuring cause of the buyer buying the house, then he does not pay a commission. But if any real estate agency is involved with being the procuring cause of the buyer, then there's a commission due. A question from Chapter 12, the chapter on deeds. Who signs a deed? Well, the grantor signs a deed. The grantor is typically the seller. They sign the deed. The grantee is named on the deed. And again, the grantee gets the deed when there's delivery and acceptance in the here and now. How do we know that the grantor signed the deed? Well, that deed is accompanied with an acknowledgement where an officer of the court receives a swearing from the grantor, where the grantor swears that he is the one that is signing the deed. Excuse me. When a town uses the right of eminent domain to take part of your property through condemnation, they decide how much to pay you by which method. So we're looking at somebody's property and the city is going to take the first 10 feet of their front lawn in order to widen the road. How would they decide how much to pay you? And they would decide by the before and after method. The before and after method. And the amount of money that they would pay you is called severance damages. They determine how much it is by the before and after method, and that's when they do a partial taking through condemnation. And what gives them the right to do the partial taking is the concept of eminent domain. A type of loan that allows a 0% down payment is a VA loan. VA loans are eligible to people who have served in the military service and have been honorably discharged. And they are able to get a 0% loan. They get the loan from a lending institution that is approved by the VA. The interest rate is at market interest rates, but the advantage is they can put zero down. That means they would have a 100% loan to value ratio. This is the chapter on liens, chapter 15. All of the following are involuntary liens. That means liens that are placed without the property owner's permission. All of the following are involuntary liens except the mortgage lien. The mortgage lien is a voluntary lien that's created when you ask a lender to lend you money, and in turn, you give them a mortgage. Remember, the borrower gives the mortgage to the bank, and that mortgage that you give to the bank creates a mortgage lien. And since you're voluntarily giving it, it is a voluntary lien. The other three types of liens there are all involuntary liens because they get to be placed on your property without your permission. This is federal laws affecting real estate. And this is one of the federal laws that affects real estate, which transactions are not covered by RESPA. So when they wrote the RESPA Act, which stands for Real Estate Settlement and Procedures Act, what types of loans are not covered? And it's a transaction where the seller provides all the financing. That's one of the exceptions from the requirements of complying with the RESPA Act. Question number 17. This is closing statements. All of the following are debits to the buyer on the closing statement, except the buyer's new first mortgage. And if we remember our wheelbarrow of money that the buyer has to bring into closing, his new first mortgage, that money is being sent into the closing person, whether it's the title insurance company or the attorney, and that reduces the amount of dollar bills he has to bring in his wheelbarrow. Therefore, it is going to be a credit to the buyer. So we're looking for all of the ones that are debits to the buyer, except taxes prepaid by the seller are going to be a debit by the buyer. The purchase price is by definition a debit to the buyer. Title insurance charges are a debit to the buyer. Which one is not a debit to the buyer? The buyer's new first mortgage. This is the chapter on listings. What type of lease requires no notice to terminate? And it is a estate for years. We do have a typo here. This should say lease. This should say what type of lease requires no notice to terminate. And that is an estate for years. A real estate property manager is what type of an agent? So if you are a real estate property manager, you are a general agent. If you're a listing agent, or if you're working with a buyer, you're a special agent. If you're a non-agent, it means you have no fiduciary duties. And if you were a disclosed dual agent, you would have to have informed consent to both parties. But a property manager is a general agent. They have a broad range of responsibilities over a long period of time. Question 20, chapter 20. Blockbusting is, and blockbusting is inducing sellers to list their homes because a protected class is moving into the neighborhood. Inducing sellers to list their homes because a protected class is moving into the neighborhood. Selling homes in a certain neighborhood based on race, that's called steering. Steering is also not showing homes to a person based on race. Again, that's still steering. And refusing loans to people based on race, that's redlining. So blockbusting is inducing sellers to list their homes because a protected class is moving into the neighborhood. This is on taxes. A seller may receive $250,000 exemption from capital gains on homes they sell, $500,000 for married couples, if they and have lived in the home for 2 of the previous 5 years as their principal and primary residence. Doesn't matter how old they were, doesn't matter when they purchased it, and doesn't matter that they had tenants in it. As long as they lived in it for 2 of the previous 5 years, then they get their exemption from $250,000 for capital gains if they're single, $500,000 for capital gains if they're a married couple. This is from the chapter on appraising. The comparable sales approach to appraising a single-family home is based on which principle? And it's based on the principle of substitution. And the principle of substitution states something is only worth as much as something equal in value can be substituted in its place for. Okay, the principle of supply and demand says that when the supply increases, the demand goes down. So when the supply increases, prices go down. When the supply goes down, prices go up. That's the situation we're in now. The supply is going down, so prices are going up. The principle of competition says that excess competition is created by excess profits, and that excess competition ruins the profits. The principle of conformity states that when things are the same, they have the highest value. And we always talk about in the principle of conformity, regression, which is when you have the nicest house in the crummy neighborhood, or progression, where you have the crummiest house in the nicest neighborhood. And regression is bad because it brings your house value down. Progression is good because it brings your house value up. George Washington and buyers today use what method to define the location of their properties? And we know they use the meets and bounds definition, the meets and bounds description. Meets and bounds description has a point of beginning and a point of ending. It has monuments and benchmarks and a datum. It's created by a surveyor. And that is what's known as the legal definition of your property or the legal description of your property. That meets and bounds definition or description that's created by the surveyor, that is included with your deed and included with your mortgage. That's why it's known as the legal definition. Chapter 24, the Municipal Land Use Act. It requires that all municipalities have a planning board, and they must have 7 or 9 members on the planning board. And that planning board then sets the zoning and the uses for all the specific properties within a municipality. One of the questions that comes up on the test many times is what entities have the ability to charge you real estate taxes? And the answer is only your municipal entities can charge real estate taxes. There is no state real estate tax, and there is no federal real estate tax. Chapter 25, the math question. The seller needs to pay off his original loan of $125,000. He will also pay a 5% commission. So what does he need to sell his home for? So we know that this is the inverse thing. So you're going to take the 125,000 and you're going to divide it by the additive inverse of 5%, which is 0.95. And if you take 125,000 and divide it by 0.95, the answer you come up with is $131,578.94. If you wanted to check your answer, let's just take that 131,578.94 and let's take away 5% and see if we get $125,000. So again, that's look for that question on the test. All right, under the Bulk Transfer Act, when must notice be given of a property that is going to be sold? And the answer is 10 days prior to closing. And this is where the Bulk Transfer Act gives notice to the state that your property is about to close, and you're required as the seller to give information about all of the people to whom you owe money on this property. For instance, if you're selling a business, all the people that are vendors that you still have accounts payable due to. And it must be done 10 days prior to closing. This is the chapter on environmental issues. All of the following are known health hazards except for electromagnetic waves. Those are like cell phone towers or high tension wires. The electromagnetic waves that are produced through the current passing through those is not a known health hazard. Radon is a known health hazard, a colorless, odorless gas that lays on the floor of your basement. Asbestos is a fiber, mineral fiber that's used to insulate or to make floor tiles or to make asbestos shingles on the side of your house. Those molecules of asbestos, when they get inhaled, can cause asbestosis. And lead is an element that's used as a hardening agent in paint, among other things. And any house that was built pre-1978 could have lead in it. And we have to use a lead disclosure where the seller informs the buyer if they have any knowledge or any record of any lead. And then the buyer holds or chooses to hold or chooses to release the ability to do a lead assessment and cancel the deal on the basis of lead. This is chapter 28, recommendations on how to pass the test. All of these are recommendations to take the test except and leaving answers blank. Do not leave an answer blank on the test. Fill it in. If you leave an answer blank, it just counts as if it was wrong. There's no extra penalty for having a wrong answer as opposed to just having a blank question. So answer all the questions on the test. And remember, these are recommendations except. If you're not sure of a question, mark it for review and come back to it later. Always look to reread the question if you don't know it and then take your best guess. And don't jump to conclusions. Watch for those words like except or all of these, but all of those type terms are a little bit confusing. And make sure you read the whole question. Some people use a technique of reading the answers first and then going back and reading the question. Any of those will work, but never, ever, ever leave the answer blank. All right, so that's all we have for this little Quizlet and this little review. Again, we will see you next week in person. I hope everything is moving along on your progress, and we are going to start next week with chapter 1 again and start going through the chapters. So if there's anything special that you want to go over, please let me know. Thank you very much, and we will see you soon. Bye-bye.